it out to you. Thank you. We will send it to the email that you registered with. During the presentations, if you have questions, please type them into the Q&A and we will ask our guests, and we have moderators who can reply to them. If there are answers that we know, we will reply to them, but we will also capture some of those questions as well and maybe make a Q&A afterwards, a follow-up that we will send out with the link for the webinar. So each segment will have its own moderator who will work with the presenter. So thank you for taking your time out of your busy schedules to be here. And I want to move forward, and I am going to try and play a video. So I didn't do great with the last. I'm going to try and share this video with you. Okay. And someone please confirm that you guys got it.
Hi, everyone. I'm Los Angeles County Supervisor Catherine Barger. Thank you to the Association of Realtors for hosting this informative webinar on wildfire relief, recovery, and rebuilding. I know that the wildfires directly affected your membership, both for those who lost their own homes and those who've been working with clients who lost homes and businesses. Everyone knows someone who has been affected by the fires. The impact has been so far-reaching. I am fully committed to restoring our community and bringing it back even stronger than before. But the county cannot do this alone. We need to work with our partners at all levels of government, private sector, and our community. I appreciate that your members are so engaged and willing to roll up your sleeves to help. By staying aware about the reality of residents' needs, we can strategize our rebuilding efforts and bring every resource to the table. Impacted residents and businesses need assistance from a variety of industry professionals to get back into their communities. We must also make sure that residents are educated about predatory practices like price gouging, land speculation, undervalued and unsolicited offers, and other scams. I will stop this in its tracks. These residents have suffered enough, and we will not stand by while opportunists take further advantage of a vulnerable situation. My hope is that realtors will be advocates and will be a source of support for our clients who are navigating fact from fiction. Real estate professionals will continue to play a pivotal role helping communities become whole again. I would be remiss if I didn't acknowledge the efforts your industry has already made to assist fire survivors. I want to thank the California Association of Realtors for its Disaster Relief Fund. Because of this hard work, they've raised more than $2.7 million, assisted hundreds of families, and distributed $1.9 million in grants. I'd also like to thank the National Association of Realtors for providing survivors with grants up to $1,000 to meet the immediate needs. Generosity makes all the difference. And in the midst of such loss, it's been heartening to see how generous our community has been, stepping up to those who need it most. Our work is already underway, but we have a long road ahead. We'll need your expertise and partnership. Thank you for your willingness to stay engaged. Together, we can and will rebuild.
Great, thank you. And Corey, I'm going to allow you to share your slides. And if you can stick around and help with some of the Q&As if people do have questions. We have asked them to submit them through our Q&A, and you will have access to be able to reply to some of those yourself. And I will turn it over to you.
Well, thank you so much, Elizabeth. Again, my name is Corey Williams, Public Information Officer with the U.S. Small Business Administration's Office of Disaster Recovery and Resilience. And my heart goes out to the realtor community. I'm in, one of my side jobs in Texas. I've been a licensed real estate broker in the state of Texas since 2005. So I know how this has a tremendous impact, not only for the community and your buyers and sellers as well. So I'm going to go through a short presentation. And then from there, we're going to go through any questions you may have. So SBA offers low interest loans to not only businesses of all sizes, but nonprofits, homeowners, and renters not covered by insurance or other recovery funds. Now, for this particular incident period, which is January 7th through the 31st, 2025, the deadline has been extended now. So again, I was on vacation, Elizabeth, so my slide hadn't been updated, but the deadline is March 31st, 2025 to apply for physical damage, and economic injury is October 8th, 2025. But I really wanted to touch on the necessity for our realtor community for the economic injury disaster loans. A lot of times you can see, a building, totally destroyed by fire, or water in the building, roofs blown off by a tornado. But so many instances, businesses do not see the drop in sales, having to lay off employees, not being able to meet the monthly mortgage or lease expenses. Those are all signs of economic injury. And even though the deadline to apply for economic injury is October 8th, 2025, I strongly encourage our realtor community to really look into resources earlier rather than later. So many times I've seen, businesses wait until July or August or September, and they'll say, well, Corey, we've had a drop in sales for the last 6 months, or we had to lay off employees because the books are tight. The good thing about the SBA program is that by getting into the system early and getting that first 25,000 for the physical loss and the first 25,000 for the economic injury, that's a totally unsecured loan. Now you can't cross collateralize, so you can't get 50,000 for physical loss or 50,000 for economic injury and have it be unsecured. But by having that first 25 and 25 as unsecured capital, maybe down the line in, let's say, June or July, if you realize you may need more funds, well, you can always request extra loan amounts for up to 2 years from the date of the loan authorization agreement. Now, interest rates for the homeowners and renters is as low as 2.563%. Interest rates for our business owners is as low as 4%, and interest rates for nonprofit organizations is fixed at 3.625. Now, keep in mind, even if you are approved and there's no cost to apply, no prepayment penalty, but most importantly, even if you're approved, you're under no obligation to borrow any funds. And interest does not accrue until 12 months from the date of the first disaster loan disbursement, and there's also no payment that's due for the first 12 months from the date of the loan disbursement as well. So who can apply for an SBA disaster loan? Well, a lot of people don't realize is that, in times of disaster, the largest amount of our lending, I think we're at $1.9 billion in approvals, and about 1.7 billion of that is actually for homeowners and renters. We also, again, help out businesses and private nonprofits, but in times of disaster, the largest amount of our lending goes to homeowners and renters. Now, you must be located in a declared disaster area, which is Los Angeles County, if you had physical damage. Now, if you had economic injury only, which is including Kern, Orange, San Bernardino, and Ventura counties, those are what are considered contiguous counties. So again, Kern, Orange, San Bernardino, and Ventura, those are eligible for economic injury only in that situation. Now, again, we do encourage all who were impacted to apply. Renters can borrow up to $100,000 to repair, replace disaster damaged personal property, which would include any automobiles that may have been damaged as well, and any insurance deductibles. And homeowners can borrow up to $500,000 to repair, replace disaster damaged real estate, and up to $100,000 to repair, replace disaster damaged personal property, which would also include any vehicles as well. And SBA, especially for homeowners, can cover the insurance deductibles, debris removal, which is a hot button topic, and also refinance and relocation on a case by case basis. Now, business owners can borrow up to $2 million to repair, replace disaster damaged real estate, machinery, inventory, and equipment, But again, the biggest thing that I emphasize, not only for our businesses and nonprofits, is the need for working capital to sustain the operations during this recovery period. And economic injury disaster loans can be used for operating expenses such as payroll, monthly lease obligations, mortgage obligations, any kind of rent or accounts payable. And sometimes it may be a situation where a realtor may have had a fixed office, let's say in Altadena, and that building burned down, and they have to actually relocate to a temporary office. Well, that is the exact purpose of the working capital loans, is whatever's necessary to pivot and keep the business operational, whether they're in the Palisades, whether they're in Altadena, wherever they may be. They can always use working capital funds to use the funds how they see fit to keep the business operational. Now, also for our homeowners, one of the things that we're really trying to encourage is that when we rebuild, we also want to rebuild stronger. And SBA can offer up to 20% of the total loss for all perils now, not just for wildfire. Now we can also protect from wind, tornado mitigation, flood mitigation, earthquake mitigation, and we've had some small tremors. So we always want to make sure we're protecting from all future harm. So, just a couple of examples of wind and tornado mitigation could be bracing or upgrading to wind rated garage doors, installing hurricane roof straps, upgrading to pressure rated windows, and then installing safe rooms or storm shelters. For flood mitigation, that could be sealing your roof deck, elevating structures, adding sump pumps, relocating outside the floodplain, or landscaping the property to improve water runoff and drainage. And then for wildfire mitigation, it can include installing a Class A fire rated roof, removing roof and gutter debris that can be ignited by airborne embers. And then for earthquake mitigation, it can include installing window film to prevent shattered glass injuries or anchor the rooftop mounted equipment. The key thing to remember that for any mitigation, this opens up an additional 500,000. So it's 20% of the total loss up to 500,000. So for many of our homeowners in the Palisades or Altadena who are rebuilding, if you have a mitigation plan in place, you can borrow the 500,000 for the real estate repair replacement, but then get the up to additional 20% of the total loss up to 500,000 for mitigative measures as well. So the application process is very easy. The first thing that I would tell anyone to do is that while we have disaster recovery centers in the city, we have one in Pico and then we have the one off of Woodbury. I would strongly recommend to visit a disaster recovery center in person. However, if you're unable to visit a disaster recovery center in person, you can apply online by going to lending.sba.gov. Again, that's lending.sba.gov. Now, keep in mind the filing deadline has now been extended to March 31st, 2025, but the deadline to apply for economic injury is October 8th, 2025. Now, once we actually receive the application on file, we're going to send a member of our loss verification team to conduct a property inspection. And many times, our property inspection is going to be a lot higher than insurance because we want to make sure that we're kind of covering any kind of uninsured or underinsured situations. So once our loss verifier he or she completes their inspection, then the file is passed over to the loan officer where they can review any insurance or other recoveries and recommend a loan amount based on anything that the insurance did not cover. Now, again, for homeowners can borrow the unsecured 50,000, and then after that, it becomes what's called a draw loan. So, as you know, if certain things are done, they can release other funds. And for the business owners and nonprofits, they can get the first 25,000 for the physical loss and the first 25,000 for the economic injury. And again, that is unsecured. And then for our renters, they can get the entire 100,000 unsecured for their rental for any kind of personal property or vehicles that may have been destroyed or damaged. So let's recap. For business loans, this is for businesses and private nonprofit organizations. They can get up to $2 million to repair, replace disaster damaged real estate, machinery, inventory, equipment. But the most important thing that I emphasize for the realtor community is the need for working capital loans. So making sure whatever is necessary to keep your business operational, that because there may be closings that are pushed back. There may have been closings that are canceled. There may have been homeowners who were in the process of selling a house that unfortunately may not have a house because of the fire. So that creates economic injury. Now, home loans for homeowners, they can borrow up to 500,000 to repair or replace disaster damage real estate, and up to $100,000 to repair or replace their disaster damage personal property, which would include any vehicles lost. And again, the mitigation on the bottom right. 20% of the verified physical damage, homeowners are limited to up to 500,000 on top of the 500,000 for real estate repair replacement. Now, SBA has customer service representatives that are staffed in all the disaster recovery centers and business recovery centers that you may see throughout the city of throughout Los Angeles County. Our CSRs are available to answer any loan program questions, explain the application process, and assist with completion of your application. And then also, we can assist with loan reconsideration or reacceptance. Because keep in mind that if you happen to not be approved for a loan, you have up to 6 months to apply for reconsideration or reinstatement of your loan. So a no for SBA is never a final no. So if you have any questions, feel free to visit sba.gov/disaster, or you can contact our customer service center, which is 800-659-2955. Or again, while we have these disaster recovery centers and business recovery centers in the area, I strongly encourage you to take advantage, get that one-on-one assistance that you might need from someone. If there's any other supplemental documents that you need to turn in, these are all things that you can do through the disaster or business recovery centers. So with that, I'm going to open up for any questions and stop sharing.
Okay,
So
great. I have a couple questions, and I'm going to start with one that was actually posted yesterday, so it's not up there because I was not able to answer it, and I think you maybe have some more insight. And this was from Caroline Haddad, and she said, I had a listing in Malibu that burned down and had a potential buyer whose home also burned down, and the seller's primary home burnt down. Is there any relief for agents?
yes, and that's exactly what I was talking about, Elizabeth, because again, that's an economic injury to that realtor, because that was anticipated revenue from the sale of not only their primary residence, that was also they had other properties that they were looking to list and potentially represent buyers on as a buyer's agent. So whenever those things fall through as a result of the fires, yes, that's where that economic injury can come in at. And the one thing I would recommend to that particular realtor, go ahead and start with the unsecured 25,000. And the one thing that they may have to show is like a copy of the contract or any information that can be used to show that create an immediate economic injury for that particular agent.
Okay, and then I have it looks like it's a two-parter. So one, it said, if a renter had renter's insurance, does this not apply? And then there was a follow-up, just to be clear, for SBA loans for homeowners, this is if there is no insurance on the property, correct?
That is correct. So SBA, just like FEMA, we cannot duplicate benefits. So let's say present two situations for you. So let's say we have a renter's insurance policy, and it's 25,000, but the renter had, let's say, they lost all their personal property. So now they have, let's say, 50,000 in damage. Well, they can borrow 25,000 for the personal property because 25,000 would have been covered by the insurance. So we can't give them a $50,000 loan. Otherwise, we would be duplicating benefits. Now, for homeowners, many times is they have usually a significant deductible, maybe 1%, 2% of the loan. So let's just use a 3%, since most realtors get 3% on deals, particularly. So let's say we have $1 million home. So that is $1 million listing. So that's $30,000 commission right there. So right, I think my math's right. Yeah, yeah, $30,000 commission on that. So that again, whenever that listing falls through, or because of the fire, there's no listing at all. That's the immediate economic injury in that situation. And then also with the actual insurance piece, if that particular homeowner had insurance to rebuild, yes, they're eligible for the SBA program, but still that creates still economic strain upon the realtor, because now they were anticipating putting that actual listing together in February, but now because of the fires, they won't be able to put it together maybe until February 2026. So again, there's probably a number of situations where that's occurred, where they need to rebuild and possibly resell the land. So in that situation, that's where the realtor can be helped by the economic injury piece, and the homeowner in rebuilding their property can be helped as well.
Okay, thank you. And we have one more. I'm going to do one more question, and this is from one of my members. And I know this was because something from the earthquake that we had in '94. This was an instance that happened to her. So, do SBA loan documents state that the SBA can sell these loans to another banking institution? After the '94 earthquake, her refi loan was sold to a Texas bank, and the interest rate immediately went up to 13.5. Is this possible for the new loans? Is that still happening?
That is an outstanding question, Elizabeth. And no, that will not happen with the Office of Disaster Recovery and Resilience. So all of our loans are directly funded by the U.S. Treasury. So it's going to be fixed interest rates for homeowners at the 2.563 or as low as 2.563, fixed interest rates for business owners at 4%, and then also for nonprofits at 3.625%. We will not be selling any of the loans. We have our we have our servicing centers that are in El Paso and Birmingham, Alabama, that are still servicing all the loans. So no, we will not be selling loans, and that will not, and the actual interest rate will not increase at all.
Well, thank you. And thank you so much for being here, Corey. If you want to go backstage, if there's any more questions, or you are free to go, I am going to post your information, your contact information again. So Claudia had requested for yesterday's to all the contacts to be posted. I'll post yesterday's as well as today's in that chat, so everybody can grab that. And again, this will be sent out to everybody who registered to your email. So thank you so much, Corey.
Thank you.
Okay, all right. And next I want to bring Kimberly Joe up, and I'm gonna now see if I can share without sharing all my, I think with all my, okay. How's this? Now just seeing, are you guys seeing the slide or no? Yes. Kimberly
Beautiful.
Joe, who is from the California Association of Realtors, is going to be handling the next segment. And we have some people here from Fannie Mae, and I'm going to hand it over to you.
Thank you, Elizabeth. We are thrilled to have Sidra Goldwater and Loretta Cephas join us today. They are from, as Elizabeth mentioned, Fannie Mae. As members of the Disaster Response and Resilience team, collectively, they've had boots on the ground to provide assistance following the Paradise Fire out in Maui and now in Los Angeles. Part of their role is to take back information on what works, what doesn't work, and to be better prepared for each of these disasters that we're encountering. So your questions and your feedback and your comments today are going to help strengthen the program and the work they do. Sidra has worked on a wide range of projects, from septic tank mapping and databases to conventional financing using sweat equity loans. And Loretta is on the accounts team. She interfaces with the servicers and manages the relationship with more than 1,300 services and purchasing loans. So there's a wealth of information here. We are just again so thankful and excited to have them both here today. A quick reminder, post your questions in the Q&A. We'll be posting those and sifting through and trying to get to as many as we can once the presentation is over. And with that, thank you, Sidra and Loretta. Please feel free to share any additional intro background and share your screen as you're comfortable.
Okay, I am trying to share my screen and it doesn't seem to be working, but you do have our slides. So
Okay,
you
then go ahead and kick off and we can have one of our
Sure.
folks share.
So thanks. As Kimberly said, I am Cedra Goldwater. I'm on our Fannie Mae's Disaster Recovery and Resilience team. Just for folks who I know we have a bunch of realtors in the audience, but I always like to make sure folks understand who Fannie Mae is. We are the largest purchaser of mortgages on the secondary market. On the single family side, we own 1 in every 4 mortgages. And then on the multifamily side, we own about 20% of apartment units. Why this is important is that the policies that we're going to be talking about today are for Fannie Mae loans. They're aligned with our brother or sister company, Freddie Mac. And basically, who owns your loan determines what happens to that loan. And so the policies I'm going to be talking about apply to Fannie Mae loans and Freddie Mac loans. So these are aligned policies per a regulator, the Federal Housing Finance Agency. Many servicers follow these policies as well, but I can't guarantee all servicers do. So I really am talking to Fannie and Freddie Mac owned loans. Next slide, please. So the first topic we'll be talking about are insurance proceeds. And so one of the things I want to share, and I definitely when I'm out in communities that have been impacted by disasters, is that I want to emphasize that unlike a car that may be damaged or destroyed, a homeowner is not required to apply their insurance proceeds to pay off their mortgage. They may choose to, it may be the right decision for somebody. But if they really want to rebuild, it probably is not the right decision because that is just going to, lower the amount that they have to, apply to the rebuilding effort because, a large chunk of it will go to paying off the mortgage. In addition, they would have to get most likely a construction loan. So that is something, as you're working with your homeowners or if you've been impacted directly yourself, it's something in mind, to take into consideration. Folks want to, take certain actions. They want to be very proactive, but sometimes the best action you can take is just taking a moment to figure out what you want to do. Loretta's going to be talking about forbearance. That might be a great solution while you're trying to figure out what is next. For those folks who have an insured loss proceeds. So one of the things that people may be a little surprised at, is that the lender, the servicer is going to be on the check. And so what that means is that the servicer is going to basically control how those funds are distributed. And funds that are not distributed will be held in an interest-bearing account. And so that is a Fannie Mae requirement. That is also, I know, a state of California requirement. But I would just want to be clear on that. The second piece is that the servicer is going to review the repair plan with the homeowner. And so the draws are going to be based on that review plan, and they're going to want to monitor those draws, make sure that those repairs have been completed per the repair plan. Lastly, the disbursements are going to be based on the loan delinquency status at the time of the disaster event. So if somebody went delinquent subsequently from the disaster event, they would still be considered current, and so that it would follow that those requirements in terms of how insurance proceeds are distributed. Next slide, please. So if somebody was current at the time of the fire, basically what will happen is if their damage was less than $40,000, which is probably not very likely based on these wildfires, it would be released to them in one payment. Anything greater than $40,000 will be basically released in a third, or at least that initial disbursement will be generally a third of those funds. Additional disbursements will be based on inspection. So the servicer is going to want to see that the homeowner has made progress towards rebuilding or repairing the home. And then if it was not a total loss scenario, we do allow for remote inspections. This was something that was very popular during COVID. It continues to be very popular because it basically allows, the homeowner to use their phone, et cetera, to submit video or photos to show how the property is being repaired. Next slide, please. So in terms of a homeowner was delinquent when the disaster event is, we have, we're a little bit more risk averse in this situation. So the amounts that are getting distributed are much smaller. In addition, one of the key things is that we would review, or the servicer would review the homeowner for a workout. All of this being said is we want to get the homeowner back in the home. We want to get them back to current as quickly as possible. And so that is a key thing to be aware of. And with that, I am going to turn it over to Loretta to talk about forbearances and our workout hierarchy. Loretta, are you there? If not, I can go over these slides. Okay, I will assume Loretta is having technical difficulties. Hopefully she can join us. So next slide. So first off, what is a forbearance? So basically a forbearance is a period of time that the servicer is allowing the homeowner not to make a payment. It's not that those payments aren't due, but basically we allow the homeowner to make a reduced or no payment for a period of time. Next slide. And so, why? What should a homeowner expect? So we view a forbearance, as I mentioned previously, is this sort of, this period of time where there's some uncertainty and basically allows folks to get back on their feet without concerns about being referred to foreclosure. With a forbearance, a homeowner will have the option of either making no payment or some payment. Lastly, late charges will not occur, and the homeowner does not need to provide any documentation of their hardship. It's basically based on what we call quality right party contact, just a conversation with their servicer. One thing I want to point out that has become an issue with wildfires or other disasters is that there's a lot of confusion about whether or not a forbearance impacts the homeowner's credit score. With COVID and the CARES Act, CARES Act did protect a homeowner's credit score. That is not true with just a normal forbearance. So there are some impacts to the homeowner's credit score. I always like to say that if the homeowner cannot afford to make their mortgage payment, it is a better alternative than going delinquent. Next slide. So what should folks know? So basically the forbearance will be can be approved in up to 6-month increments. I want to emphasize up to. Most servicers like to offer forbearance in shorter increments in 3 months because they really want to keep that relationship with the homeowner and keep contact with the homeowner to understand where they are in the recovery process. That forbearance can be up to 12 months per our guide. And one of the key things I want to emphasize here is that the homeowner can shorten the forbearance at any period of time. That's, again, one of the key things, as I said, is that these are not, we're allowing a homeowner to miss these payments. They're not forgiven. They still have to make up those payments. And so we want to make sure that those delinquent amounts are minimized as much as possible. Lastly, on the slide is that the forbearance plan will be sent to the homeowner in writing. I'm a paper person. I like to see things, in paper. And so that will be very clear to the homeowner what those terms are. Next slide. So what are the next steps after a forbearance? So the servicer should be reaching out to the homeowner 30 days prior to the forbearance ending. But I highly, highly encourage homeowners to reach out to their servicer as soon as possible, whenever something is changing or when they're ready to exit the forbearance. Once, when a homeowner is ready to exit a forbearance, The servicer will review them for a workout solution, basically trying to get them back to performing, to exit. The homeowner is not going to be required to make all those payments in one lump sum. Loretta hopefully it looks like she's able to join us, so she will be hopefully walking through the workout hierarchy, but she'll talk about those exit options. And basically, as I said, those payments are still due. So with that, hopefully Loretta can take it over from here and talk about our workout hierarchy. You're on mute, Loretta, I think. Is anyone else able, Kimberly, are you able to hear Loretta? Unfortunately,
it looks like we have video, but no audio this time.
Okay, so I will continue on. So this is our workout hierarchy. And so this goes from, I always like to say least impactful to most impactful. I'm going to go through these slides pretty quickly. So next slide. Repayment plan. So a repayment plan, next slide, is pretty straightforward. It's basically, the homeowner makes sort of payment plus for a period of time. Those tend to work for very short term hardships. We're talking like a month or two. But this is probably not likely in this situation. Next slide, please. So our disaster payment deferral. This was introduced with COVID. We then expanded to our disaster impacted homeowners. But basically, what a disaster payment deferral allows somebody to do is to defer up to 12 months of past due payments. Those payments are put into a non-interest bearing balance that's due upon payoff or sell the home. So basically, somebody sells the home, if they refinance, all those payments are then due at that point in time. One of the reasons that this workout offering is very popular is that the terms of the mortgage are not changed. So if a homeowner was, had 25 years left in the mortgage, they still have 25 years left in the mortgage. They keep their interest rate. It's basically, we are just letting them to sort of put those past due payments at the end. Lastly, that homeowner will get a written agreement for what that payment deferral looks like. Next slide. So who is eligible for a payment deferral? So this is pretty straightforward. The homeowner has to have been either current or less than 2 months delinquent at the time of the disaster event. Again, at the time of that disaster event, they have to be at least 1 month, but no more than 12 months delinquent at the time of the evaluation. And then this is really important with, particularly hurricanes, but also probably somewhat with wildfires, is that they cannot have received a disaster payment deferral for the same disaster event. If they had, for example, received a COVID payment deferral, they're still eligible for a disaster payment deferral, but they can't receive a payment deferral for the same disaster event twice. So next slide, please. The next step in our workout hierarchy is our flex modification. So this is our modification offering. And this is basically trying to get the homeowner to the most achievable mortgage payment period. All the arrearages will be recapitalized into the loan balance. The homeowner may or may not receive a payment reduction depending on if they have a fixed or an ARM, as well as whether or not it's greater or lower than our Fannie Mae mod interest rate and what their LTV is. But what we're trying to do here is really achieve that 20% P&I payment reduction. That is key. And so it's either achieving that 20% payment reduction or taking out to 480 months. One of the things that I want to make sure folks are aware of is we did change the way our waterfall works for the Flex Mod in November. It used to be that homeowners would automatically go to 480 months. That's not necessarily true today. So it's more of a custom fit solution. And then lastly, the homeowner may receive principal forbearance. And then I need to disclose that if the homeowner is less than 3 months delinquent, they will need to submit what we call borrower response package. Next slide. Next slide, please. So folks, I'm sure here are very familiar with what a short sale is. This is if somebody does want to exit the home and they owe more than the home is worth, this would be the solution. They would get a deficiency waiver. They may have to make a contribution, and there could be tax implications. And last is our mortgage release or deed in lieu of foreclosure. Next slide, please. Next slide, thanks. Again, this is if basically the homeowner wants to turn the property over. A couple of things to note, if you could go back one slide, is we do have, back one slide, thanks. We do have a couple of exit options that may not necessarily apply to a wildfire scenario, but I did want to share that if somebody was in a home that was not damaged but does want to exit the home, we do have some rent back options, either 3 months at no rent or 12 months market. And then the last thing I wanted to share is our Here to Help. So this is a twofold. These are our borrower-facing, sort of website with a lot of information that I've already talked about today. But the second part is it is also deals off. Sorry, too much speaking now. It also offers information on our Here to Help housing counseling offering. And homeowners can access that by dialing 855 Here to Help. And that is staffed by a nonprofit organization with HUD approved or HUD certified housing counselors who have experience both in natural disasters. So they're familiar with how to deal with insurance proceeds, how to deal with FEMA denials, SBA loans, SBA denials, all that myriad of stuff that folks are now beginning to face and sift through. They do have experience on that. And then lastly, as I said, who owns your mortgage is incredibly important. One of the other tools on this website is our loan lookup tool. And so a homeowner can enter their information, their street address, the last 4 digits of their social security number, and they can look up to see whether or not Fannie Mae owns their loan. And I just threw a ton of information. I'm happy to take questions, and hopefully Loretta can join me. Otherwise, she'll just give me encouragement.
Thank you so much, Sidra. Loretta, I think we still have an audio issue. If you want to jump backstage and then come back, they may be able, we have lots of good team back there that might be able to help. So I'll go ahead and open the chat box. And starting with the first question, Sidra, Janice Morrow asks, she didn't quite understand the rent back exit options and the Here to Help. Can we take another moment to double click and unpack that a little bit more?
Sure. So if somebody were to take a deed in lieu of foreclosure, what we call a mortgage release in our service.
Let me see if I can do it.
Oh, sorry, one sec.
Our servicing guide, basically that's when, the homeowner releases the property to the servicer to us. We offer 3 exit options. One is an immediate move. The other is a 3-month, sort of rent back where we don't charge any rent to the homeowner. And then the last one is a 12-month rent back where we would charge market rate rents to the homeowner. And this is really a situation we see the last 2 years often when somebody wants to finish out a school year or is trying to find, an alternative place to live. So those are some of the flexibilities that Fannie Mae offers that is not offered by Freddie Mac. I just want to point out.
That's helpful. Thank you. You've done a lot of talking, so we'll spare you. If you don't mind doing one more question with us, the question is, will the insurance check be made out to the mortgage company and the homeowner?
Yes. So because the property is securing the mortgage loan, the insurance check should be made out to both the homeowner and their lender, their servicer. The homeowner may get a check for personal property that would be separate. Because we don't have any stake in that, but anything related to the actual home should be made out both to the lender and the homeowner.
Makes sense. Thank you. And just lastly, is there anything you want to share, any message you want to leave with our realtor community that's on the line as they're out in the community in Los Angeles?
Yeah, and I would emphasize that this is a marathon, not a sprint. If folks have questions, again, our Here to Help website is incredibly helpful. There's a ton of information out there. The other part I would emphasize is our Here to Help housing counseling service that is free to homeowners. There is no charge to them, and it's open to any homeowner or renter as well. So it does not have to be backed by a Fannie Mae loan or rental property. So that's something, as people are having, a lot of questions, this is a set of circumstances folks do not ever hope to be in or want to be in. And, there's a lot of uncertainty and there's a lot of, they can provide counsel in terms of, is what folks are hearing true? As I said, one of the things, we've heard, unfortunately, with forbearance is that it doesn't impact your credit score because of the history with COVID. I want to emphasize that it can impact the credit score. And then lastly, just, as I said, sometimes you just need to take a deep breath. So, you may, sometimes taking a step back to figure out what you really want to do may be the best option.
Thank you. Great words and great reminders. So with that, we thank you again for joining us from DC and sharing from just the wealth of experience you've had in a number of these situations.
Of course. Thank you.
So at this time, I want to introduce Sam. He's the Government Affairs with Pasadena Foothills. He's going to kick off our next segment.
Beautiful. Thank you, Kimberly. Can you guys hear me?
Yes.
Perfect. Thank you, Kimberly, and to all our panelists for an insightful and engaging discussion. We truly appreciate the time you have shared with us today. For those who may not know me, my name is Sam Seguier, and I serve as the Government Affairs Director for the Pasadena Foothills Association of Realtors. It is my pleasure to introduce our next speaker, Mark, a former colleague of mine from the California Association of Realtors. Mark will be sharing valuable insight on down payment assistance programs, a crucial topic for our home buyers and industry professionals alike. As a reminder, we encourage you to submit your questions using the Q&A feature throughout the presentation. Mark, the floor is yours.
Thank you so very much. I'm hoping everybody can see the screen okay. And as was stated, I'm Mark Farfel. I'm the lender liaison here at the California Association of Realtors. And I wanted to go ahead and go over a couple of quick things. Yesterday, I was able to listen in and heard some wonderful information about property taxes and specifically the misfortune and calamity tax relief from the assessor, update on the debris removal, wonderful information about disaster recovery documents and how that can still be put in place, and also if there's a decline in value. We also participated with CABREP for some other updates from FEMA, as well as the information we just heard today from Corey from SBA, which was wonderful, LA County Mental Health, and from our own Neil Kalin on legal do's and don'ts for all of our realtors. All of these are available in recording and think that they're very valuable for all of you to get to know and to be familiar with. Today, I want to make sure that you all know that Transaction Rescue, I'm here to help you throughout the year. Get in contact with many of these people that have already spoken and or any lender, insurer, anything else that we can do on mortgage-related products, closing offices, doing escalations on new loans, anything that you need. The most common concern today with these fires, obviously, is getting a hold of the servicer. And I'll go into a little bit more about that as we go forward. But the other things is, how do we get started with all of it, right? You got to make sure that you've done your double check. You've got to make sure that you've got all of these key elements involved, contacted FEMA, making sure that the servicer, through communication, just like was stated by Fannie Mae, is the first step in anything related to the other financial aspect of having a loan on these assets. Okay, double checking about the insurance. You've already made sure that your city services are done, and you heard about the assessor and debris removal. But your local association, who have provided all of this, who have supported you and put on this program, is the best contact for anything that you need. And then we're here for you realtors across the board at the state association as well. When contacting the servicer, as you already heard from Fannie Mae just a second ago, very important that you're going ahead and acknowledging that verbal acknowledgement that you're part of the location that was affected, and that immediate 90 days is put in place with paused credit reporting. That was always the big concern, is am I going to be affected right away just because I asked for help? And again, Fannie Mae, Freddie Mac, and other investors, all of the large 5 banks, most of the lenders in the whole have gone ahead and said they're going to follow this same pattern. After that, Fannie Mae and Freddie Mac have both stepped up to say that they would provide up to 12 months. So I just want to continue to reemphasize that as long as you've been in communication with your servicer, the person who is taking care of the loan, sometimes we call them your lender, but it's actually a servicer that handles it. So we just want to make sure that everybody does it, and even though they communicate differently. Some of the resources that CAR offers to all of you is Smart Zone. And it's where we've gone ahead and put all of our information that we collect from other sources that we have from our own individual groups. But I just wanted you to know that the Wildfire is key to all of us. And I don't know if it pops up showing smartzonecar.org, but that's what it is. It's www.smartzonecar.org. And we can go ahead and get to all of these resources. Now, I have put links behind this that let you jump. So if you took my slides, you could jump right to it as well. The important thing, obviously, and where I am a part of, is mortgage fundings, anything related to fraud, okay? As it relates to price gouging and other parts of immediate assistance, I'm here to help, but we also have our wonderful legal team here to give you insights as to what's going on. And lastly, within Smart Zone, when you're working with your consumers, we've dedicated a section specifically to what the day-to-day consumer might need, whether they're a renter and or a mortgage holder. So if they might be a client of yours to be, or they were in the middle of the transaction, as well if they are an existing holder of the home. To that end, you also have access very quickly to legal risk management insights. These are just a couple of the agreements, again, under our car.org/risk management. And you will go ahead and see all of these little quick guides that you can share the information with your clients. Buyer representation agreements, you all have known over the last 6-8 months, we've been focused on that, but also very clearly with the fires, price gouging, unsolicited offers, as well as the idea of defensible space. Okay, so just wanted to make sure. Where they asked me to add some extra insight was about down payment assistance. So whether your clients are starting anew, or if they're looking specifically for, as an example, Golden State Finance Authority's special fire or disaster type of down payment assistance can be found in this location that CAR has had for you. Going on 14 years, everybody. We're just celebrating our birthday in February. So anyhow, we want you to know that it comes up when you press finddownpayment.car.org. In the general search, you can start typing specifically LA County. And when you finish putting it in, you'll see right away 45 jumps up. When you go ahead and do that, and you hit that enter and filter, you can then go into the list if you hit view programs, or you can filter with more choices, more limitations, the pricing, whether they're not a first-time home buyer, a number of other things. Under the premise of what I selected for LA County, I just wanted to share a program that we have and have offered now for 4 years at the California Association of Realtors, because we think Pathway to Home was a major piece of what was going on. The idea of people being able to get into home and get other down payment assistance, but they've never had the chance until some of these disasters, the idea of assistance with closing costs. So we put together this program to help up to $10,000. And here's just a little bit of what you would see if you go into it. On the left-hand side, here's what the outside looks like, the left-hand column. The middle is what, and the far right-hand side is what you see after you hit the Learn More button on the particular program. We also have a number of important programs and webinars that are ongoing that we hope you will learn from and be able to get additional assistance throughout. We have the Steps Towards Home Ownership, the Financing the Dream of Home Ownership, coming up on April the 3rd. Oh, and I just made a mistake of clicking and getting the link. So the link opens up. I apologize. This is the Pathway to Home detail as well that we go ahead and have. And try not to. We have Fair Housing Day coming up on April the 15th. It's a local event in Long Beach. Last year's was a wonderful event, and we think any of the realtors that are nearby and therefore specifically affected by clients with fires and or just looking for insights, good opportunity. Hopefully you'd have the chance to stay with us for the HAF Casino Night that night, where we're raising money specifically for the Pathway to Home program. And outside of that, I would take any questions or comments that you had.
Thank you, Mark, bro. What a wonderful presentation. A lot of insight and a lot of engagement. I do have one question here for you. I'm sure I feel that you may have answered it during your presentation, but I'd love to give you an opportunity just to revert back to that. And the question is, GSFA has a forgivable loan up to $350,000 for home buyers. For borrowers impacted by the 2018 and 2020 fire disasters. Will that be available for the most recent fire disasters? And I remember you showing a slide on the link to find several different loan options. Do you feel, would this be where they would be able to find that loan?
It is. And if one of you were sharing that screen or somebody went to it, finddownpayment.car.org. And if you go ahead, it's alphabetical order once you put in Los Angeles County. So the C's like California, I'm not even going to go there, Housing Finance Agency. And then it would get to G. So it's probably program 8, 7, whatever that are going to be listed there. And that program, if it's in yellow, it will have an update that says, hey, we're running low on funds and what have you. Red would be that they're out. Again, a self-funded program like that, they should not be out at this particular time. I have not been informed that they're out, but just in case, making sure.
Perfect. And I do want to remind our viewers that all this information is being recorded and the slides will be made available to your local associations and will be sent to the emails that you have registered with our presentations today. And I want to give a moment to Mark. If there's any final thoughts or a final message that you want to leave with our realtor members, this would be a great opportunity to do that.
The best advice I can give to all of you is that statement of communicate, right? If we don't know you need help, somebody else might not either, first and foremost. If we don't know, again, at your local association first, at myself, at the servicer, most important when you're trying to reach out about your own loans. Anytime you have, we're here to assist, but we need to know. So go ahead and reach out to us and we're happy to assist along the way.
Perfect. Mark, thank you so much for that information. And thank you for such an engaging and informative presentation. We truly appreciate your expertise and time. And for our final segment, I am pleased to introduce Gerard Wright from the Greater Los Angeles Association of Realtors, who will be the moderator for our closing discussion. Gerard, the floor is yours.
All right. Thank you so very much, Sam, for that last engaging segment regarding what CAR is doing on down payment assistance and establishing the American Dream for a lot of helping our members connect clients to the American Dream. We partner, Greater LA Realtors, and I think many other associations partner with the local variation of this, the neighborhood housing services of LA County. They connect a lot of folks who are looking for their first time, being a first time home buyer. And I want to just highlight some of the programs that they have coming up. The first one, and it's very timely and very timely, but also the location is very important. They host quarterly legacy summits. This is about generational wealth building. These are very informative workshops that engage the local community around family estate planning, small business estate planning, looking at if you own a property or someone manages a particular property, how they can just rebuild and improve the property, not just selling it. Home buyer real estate workshop 101, legacy talks, the importance of just what building a trust for that property is, and disaster release resource assistance. That's going to be one of the bigger pieces that they're going to highlight in person on April 12th in Altadena, Pasadena area. A location to be determined because they're finalizing some of the details around that. But we're a regular supporter and participant in these legacy summits, and we want to at least share this information with you. So if you want to register, please use that QR code to the left of the screen. Great bits of information, great resources. And if you are definitely for our agents and brokers, this is a great opportunity to introduce yourself to the neighborhood housing services, because they're going to be starting a preferred realtor network so that you can be connected with clients who are looking to become first-time home buyers. So this is a great opportunity, not just from a business perspective, but just helping that home buyer become a homeowner and really achieving that generational wealth of the American dream. So I want to at least put a pause on that so you get time to write the information down and click on that QR code, because again, this is very vital information and a great resource that we engage and partner with on a regular basis. So I'll do a quick little supportive pause there so you can get that information down before we advance to the next slide. All right, and now we'll go on to the next slide. And another program that they are a part of, and again, this is, Mark just talked about the state, kind of the statewide resources and how you look for each specific jurisdiction. In LA County, they partner with the LA County Consumer Business Affairs and LA County Center for Financial Empowerment. They supply funding for the Green Line Home program, which is specifically tackling the historic redlining that, and this is a means of which to empower and uplift economically marginalized communities. It is a grant for down payment assistance or closing cost assistance for a purchase of a home. This applies to first-time home buyers, residents with low to moderate income, residents living in high need areas, and it's a HUD approved home buyer education workshop that's required. So again, if you want to be part of their preferred realtor network, this is a great opportunity to connect some of those clients that you may know or have connections with who is looking to become a home buyer. This is a great resource to again show your value as a real estate broker or agent and be a big assistance out in the community. So that's something we want to share and use this opportunity to share at this time, because it's a great resource and something that if you have questions on, feel free to dial that phone number. It's 213-381-2862. It's at the bottom of the learn more of this particular slide. And NHS has, again, and the NHS website, you can look up at nhslacounty.org. They have a lot of resources and information if you want to learn more or participate in their what we call their preferred realtor network. That's a great place to start. And with that, I'm not going to take any questions, only because it's more for resources and information, but I want to at least share that with everyone because I think it's timely and of great importance. Now, and then with that, we will close and kind of wrap things up. And I want to thank each and every one of you who participated either today, both days, or on Wednesday. Thank you for your support, but also thank you for your participation and engagement, because we want to provide a value and resource to you all to help your clients, help your friends, your family, whoever was impacted by these wildfires. And then anyone else who is looking to do business, this is also an important resource to find out where to go, because I think a lot of folks need help at this time. One of the other resources I want to share with everyone is Pasadena Foothill Association of Realtors is hosting a presentation with the California Department of Insurance. Destiny Flores, the outreach analyst with community relations of their outreach branch, she will be doing a presentation with their association. If you want to participate in person, click on the QR code on the upper left of the screen. That will take place on Wednesday, March 26th, starting at 4:30 p.m. Or if you're going to view via Zoom, it's a view only on Zoom. Use the QR code that's on the kind of middle center, lower center, I guess, of the screen that you see in front of you. So again, Wednesday, March 26th, 4:30 to 5:30 in person. Use the upper QR code. If you're going to participate via Zoom, use the QR code down at the bottom. I think it's timely information, and we want to make sure we share that with everyone at this time. And then if someone is looking for emotional support, and I know a number of us have reached out and heard from members who were impacted by the fires, or helping them out with the specific grants that are going on that CAR had and NAR has, and even LA County related disaster relief grants. So, there are a lot of stories and a lot of thoughts that are shared. And sometimes some folks just need to be a voice and be a shoulder to cry on. Sometimes I'll go back to that last slide before you advance that one. If someone's needing to look for emotional support help, please use the Department of Mental Health 24/7 helpline, 800-854-7771. Again, this sometimes just being heard is very important. Sometimes what that can do to help someone gather their steps and gather for what's next and what's to come is very, very important. And that's why we're all collaboratively working together to make this webinar happen, because we understand that we're hearing the stories, and that's something we want to share and utilize with all of our members here who you may have been directly impacted, or you may know someone who was directly impacted. So this is just a great opportunity to share that resource of support. Utilize that QR code there to scan more information from the Department of Mental Health. Just if you need a voice to cry, talk to someone to just, hey, I'm hurting, and this is a big deal. That's an opportunity for that as well. We definitely want to share that with everyone. And I think that's the last slide right there.
Yeah, that is, but I do want to share some of the context. I did put it in the Q&A, and I wasn't sure if everybody could see it. I submitted, somebody had requested it,
Okay.
and I submitted it, and I don't know if only they could see it or if everybody was able to see it. And then I tried to do it in the chat, and the chat would only let me type. It wouldn't let me copy and paste, and there was just too many to copy and paste.
No worries.
So let me go ahead and hit my share on my Word document where I have this.
Fantastic. Well, while you're sharing that, I want to use my opportunity to thank you, Jim, Ryan, Kimberly, Sam, Gary, all of you as part of the team. As part of this effort. Thank you also very much for your encouragement, and also part in collaboration to make this a great success. Thank you also very much. All of our speakers, thank you. Thank you for taking time out to meet with us and share this vital bit of information. And as Elizabeth is kind of scrolling down some of the screen, the contact information that will be, are you going to share that into the text, or?
I can't copy and paste.
Okay, yeah, that's
into the chat. It
Yeah.
doesn't let me have that feature, and I can't type that all out.
Okay, no, that's not a problem. I think I think we can share that in kind of the final slides
Yes,
when that goes out early next week. Just want to
Yeah.
make sure we dot our I's and cross our T's and get all the final versions of the presentation so that you all have the most current, most up-to-date information. That will be included in there as well. But I know some of you are interested. Oh, I want to, talk to this particular speaker today. That's the opportunity to do so. So you got Corey's information, Glenn, Antonio Vasquez, Assessor Jeff Prain, and Daniel Vicente from Supervisor Lindsay Horvath's office. All right, well, I'll at least leave that on the screen for at least a final minute or two. So if you want to jot that down, do so. But at this moment in time, thank you again for your participation and your interest. And take care of yourselves and take care of one another. See you next time.
thank you, everybody.